So hey guys, welcome back. This is Romit once again. So let's study which one? Leverage today. Okay, so leverage isn't a big deal because Romit, you have already studied this before. In leverage, there is something called as operating and financial risk or financial fixed cost. In case of operating, now those are the first thing like whatever comes here like this one. And when it comes to financial, that is preference dividend or interest or any other thing. Preference dividend and interest. Okay, so this part, just remember this. Here the fixed cost is operating fixed cost, so you have to find. We find operating leverage. Okay, and in the second thing, in this case here it is interest and even the preference dividend, so in that case we'll find financial leverage. So nothing to more study there. So it is a relation. So operating leverage is a relationship between sales and EBIT. Financial is EBIT and EPS, and combined is sales and EPS. Okay, just remember this. And when it comes to operating leverage, the first one is same, that is contribution divided by EBIT. You know this, Romit. And the next one is when it comes to changes. So same thing, the percentage change in EBIT and the percentage change in sales. So same, this EBIT comes above. Okay, and this in case of contribution that goes up to sales. And then in case of leverage, it is combined this even, and this one is kind of important because operating leverage is the formula. If in question it is given that margin of safety cell, in that case 1 by MOS. Okay, then we'll go for financial leverage. Here also there are three problems, and the first one is same, EBIT divided by EBIT minus interest minus preference divided, that is net of tax. Okay, so this can be also written as EBT. So here it is written same thing. And when it comes to percentage change, that is when it comes to percentage change, that is EPS divided by EBIT. In the before case, it was EBIT divided by sales, and right now it is EPS divided by sales. In that case, this two will be cut off. So EPS divided by sales, that is combined leverage. Done. This one we have already studied. So the regular formula is combined is equal to financial leverage into operating leverage. Okay, so it's a combined leverage we have already studied. Contribution divided by EBIT minus interest minus preference dividends, that is net of tax. So whatever we have studied, we just have to cancel out the EBIT wala thing. In that case, we'll get this answer. And here also, this one I've already told you before. And combined leverage is a simple thing. Double-edged sword, trade in equity, done. We are done with concepts, so we'll go for questions now. This one we have studied. This one also we have studied. This is just derivation of that thing. Nothing, bro. This one you know. This one you know. This is just a derivation, and this you have already studied. This formula is a bit important. Okay, this is used, that is margin of safety. Margin of safety is contribution minus fixed cost divided by contribution. So contribution minus fixed cost is called EBIT minus contribution. Sorry, divided by contribution. Then this is simple thing. Remember this. Okay, if margin of safety rises, business risk fall, and DOL also falls. Business risk andre DOL. So if this falls, even this falls. This rises, there is an inverse relationship between margin of safety and businesses. Remember, MOS is inverse relation. Then this one are examples, like basic one, nothing a big deal. Illustration 1, this is simple thing they have already, like for everything just remember do a income statement. Okay, in this case just they are given sales, selling price, and variable cost and fixed cost. Just find out the contribution and EBIT. So contribution divided by EBIT, that is 6 times. And if you want to change it, like they've given 10% above, you just have to change the sales by 10% and just have to cross multiply and get the answer done. And this one is like 4 thing, you just have to do it 4 times done. And this one you have already studied, that is EBIT divided by EBT. EBT is only in case of when there is only interest, when there is no preference dividend. But we have studied in the case where there is preference dividend. Okay, so this is percentage change in EPS divided by percentage change in EBIT. These are just examples, don't need to study. combined leverage after your contribution. So EBIT and EBIT get cut, that is by EBIT. Done. This one also, EPS divided by sales, this. Okay, so there is this one question, this big one. You have done this 100 times, bro, literally 100 times, so you don't need to worry on this. The thing is, when there is increase, you just have to put the formula and do it. First do the income statement, and then just decrease the fixed cost, EBIT, interest, tax and all. This one, they have given the current reporting. So the only thing in this question is, so they have given everything. Okay, when it comes to illustration 4, understand, they have given everything. The only thing they did not give is other fixed cost. So when you find out when you do till here later, when you go for combined leverage and then find out the financial leverage, in that case it will be 1.4 accordingly. In that case you can find out this other fixed cost. Remember in this case, so remember in every question when you are doing this thing, you have to cross multiply everything. Okay, so here the contribution is like this one is same because contribution by EBIT there is nothing changes. But when it comes to combined leverage, they have given this already. So in that case you'll go for combined leverage. What is combined leverage? And when it comes to combined leverage, you'll find EBIT already, EBT already. In that case it gives 1060. So what is the balancing figure here? So balancing figure, we'll take it as fixed interest. Okay, and EPS, this one, variable cost interest, this is also a normal one, there is nothing big deal. Okay, this question is to find out the other things like EBIT, sales, fixed cost, and identify comparable business reason. So in this case you just have to use the formula, use it very wisely. Like first go for financial leverage and then just have to change it. It is EBIT minus interest, right? So you don't know EBT, that is, it is also called as EBIT minus interest. In that case just change it and do it. Done. This isn't a big deal. You're going to make this. So comment on the basis like okay, illustration is done, there is nothing to learn. So EPS divided by sales, that is called as combined leverage. And if you are watching this, guys, or Romit, I know only Romit watches, but still if someone watches this, please try to explain me this and this, bro. I swear I don't know, I tried so much but I couldn't. I did this actually, but I did not get it, I guess. So this one are like basic things. Okay, wait a minute. Add another window. Go for ICAI. Go for answers. Okay, go for split view. Note. Get you. Okay. So the first question is simple one. You just have to find out EPS. In that case it comes like you just have to find out percentage of change in EPS if sales increases by this. Go for operating leverage first and then financial leverage, then combined leverage, and in combined leverage you'll find this EPS. Okay, it isn't a big deal, you'll find out this. And the second one is consider earning after tax. You just have to create. Okay, this is also same. This question is also a missing figure. Even this is also missing figure. Okay, so next one is prepare an income statement. This one we have already done. Okay, this is like isn't a big deal, we have done this kind of things in illustration, so just go for it and prepare an income statement. Even this is the same thing, literally same one we have done, so no need to worry. And this is a missing F. Okay. When it comes to fourth one, this is a calculate degree of operating leverage. Degree of operating leverage is 12,000, and this one is also very easy. There's not even a single twist here. Just you can do it aram se. And fifth one, so here we have to find out wipe out sales, that is 25% decrease. 25, understand this, 25% decrease will wipe out EPS by 100%. This one you have to understand. Okay, so there is nothing big deal, just you'll find out the You will put the DOL formula and find out the fixed cost here, and later, so degree of change, understand this, 25% of decrease will reduce the by 100%. In that case, DCL will be 4, and just have to find out this one, and calculation of data. Even this one is very easy, like just have to find out the interest first. Interest into rate is amount of interest, just have to divide it, you will get the answer. EPS, you just have to do it by income statement, and this is a later one, right? Using okay, it's next one. Okay, sixth one. This one, by doing income statement you will get this, don't worry. And sixth one, what is a income statement, and prepare determine operating leverages, same that compute increase, decrease, and share at new sale. Even this is simple, bro. They have already given you income statement. Prepare that correctly once again. Prepare that correctly once again, like divided by contribution, EBIT, interest and all, and then use this formula and find out everything. And just they have told 20% increase and 30% increase, just increase it directly, like plus 20% or minus 20%, whatever you do. And in case of variable cost, it is total cost minus depreciation, and real cost, this is like increase. This one we have already known, probably even small kids will do this seriously. What is working here in 7 case? EPS, this one. Okay, here they have used a balance sheet, and the thing here it is, the answer is hidden here. Variable operating cost ratio, total asset turnover ratio, that is sales by total asset, right? So this is the first one, 2.2. Just do this. You'll find the total sales. Use total sales, variable cost, that is 65%, you'll get contribution. Variable cost 65%, you'll get contribution. Then go for fixed cost, then interest. Interest is already given, bro, seriously. 15% of debenture, that is 10 crore ka 15% is how much? 1.5, bro. And then everything is done. Yeah, you'll find this, you'll find this, you'll find this very easily, and even this one very easily. 8th one, calculate the leverage under plan B and actual capacity. This one is very good problem actually. So they have taken this one, Hariharan sir has taught me in the class, so don't worry. Situation 1, situation 2 you have to take, and here you'll get some answer like EBIT you'll get. So that EBIT you have to take it as plan B. So first case 30,000, do it twice, and next one it is 25,000, do it twice, and write everything in a one thing, done. And 9th one, this is a normal capacity is 1 lakh. Very big question. Find out the above mentioned alternatives and would you recommend or assuming the corporate taxes. This one. So this is statement of showing profitability of alternative schemes. So just in these 3 schemes, which one is best, you have to find out. Just do this statement, bro. Simple. There is nothing to worry. Go for existing one and the 3 alternate, 1, 2, 3. New share plus new share, like existing share plus new share, debentures, if there is new debenture, interest there is new, and just have to find out the total thing. Okay, and then later when it output with selling price, you'll get contribution, fixed cost, and later interest that you have already calculated here above. And the later tax is simple, and this one you're always you can already put it in a formula. And then if there is what risk, if there is low, what is this, financial leverage, then low risk, high financial leverage, high risk, simple. And here the return is also lowest and return is also highest, that is EPS. 10th one. So this is also same thing, they have given ratios and played. This is just like missing if there is nothing to teach here, you have to just play it in the exam, that's all. Go for asset turnover and all this, bro, simple shit. And this one simple. Oh, okay, so this one this is simple ring, change in revenue, it is also called as operating income. Change in revenue is also called as operating income, and change in operating income is also called as change in operating income, and revenue it is also called as what? Sales. And EPS they have already given, revenue is also already given. Just don't need to do anything, just divide it, bro, it's over. Bachpan ka khel. And the last question is, they have given all this thing, operating combined sales, interest payable. You have to find out fixed cost in this. So here same, it's just a missing figure wala thing. Find out the financial leverage, and then by financial leverage you'll find out the EBIT, and after EBIT operating leverage, you have to find out contribution, then so financial leverage is done. First they have given financial leverage, na, simply find out, and then later fixed cost they have given, na, you have to find out first what EBIT is a contribution, then go for this, or else you can just do an income statement. Okay, it is very useful. And PV ratio, you have already found out the contribution and you know the sales, so we'll get the answer. Thank you for this, and this is going to be quickest video. I guess I'm not perfect, but I'm trying to understand the Romit. Sorry, understand. Oh, who am I, Romit, and who am I teaching to, Romit? Okay, I hope Romit understand this, and just watch it at 2x, bro. You know you'll understand your voice. Just watch it at 2x before studying this, and it will be helpful. Thank you.